Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 10th, 2025, and we're diving into Conagra Brands' fourth quarter and full year 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Conagra Brands, a leading food company known for its diverse portfolio, has just released its earnings report for the fourth quarter and full fiscal year 2025. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. Conagra reported a net sales decrease of 4.3% for the fourth quarter, bringing in $2.8 billion. John, what are the key factors behind this decline?
The decline in net sales is primarily due to a 3.5% decrease in organic net sales, impacted by lower consumption trends and a negative price mix effect. Additionally, foreign exchange and M&A activities contributed to the decrease. Despite these challenges, Conagra managed to maintain a reported operating margin of 11.5% and an adjusted operating margin of 13.8% for the quarter.
And how did this affect their earnings per share?
Conagra's adjusted EPS for the fourth quarter was 56 cents, which is an 8.2% decrease from the previous year. This was slightly below the analysts' forecast of 59. For the full year, adjusted EPS was 2.30 cents, down 13.9%, reflecting the challenging environment they faced.
Operational efficiencies and future outlook. Despite the sales decline, Conagra has been working on operational efficiencies. Can you tell us more about their cost management strategies?
Absolutely. Conagra's gross profit for the quarter was $707 million, a 12.1% decrease, but they managed to reduce SG&A expenses by 17.2% to $333 million. This was achieved through lower incentive compensation and disciplined cost management. Looking ahead, Conagra is focusing on investing in high-potential areas like frozen foods and snacks while enhancing supply chain resiliency.
What can we expect from Conagra in fiscal 2026?
For fiscal 2026, Conagra is guiding for an adjusted EPS between $1.70 and 85 cents, with organic net sales ranging from -1% to 1%. They anticipate continued inflationary pressures but are committed to managing costs and driving sustainable growth.
CEO's perspective and strategic initiatives. Conagra's CEO, Sean Connolly, shared his thoughts on the company's performance and future strategy. What were the key points from his statement?
Sean Connolly acknowledged the challenging environment, citing higher-than-expected inflation, foreign exchange headwinds, and supply constraints. Despite these hurdles, he emphasized the company's focus on returning to volume growth and maintaining best-in-class market share. Connolly is confident in Conagra's long-term value creation strategy, which includes investing in high-potential domains and enhancing supply chain resiliency.
It sounds like Conagra is taking a proactive approach to navigate these challenges.
Indeed, they are. By prioritizing volume strength and disciplined cost management, Conagra aims to deliver sustainable growth and stronger margins over time, creating meaningful long-term value for stakeholders.
Key takeaways. In summary, Conagra Brands faced a challenging fiscal year 2025 with declines in both sales and earnings. However, their focus on operational efficiencies and strategic investments in key areas like frozen foods and snacks positions them well for the future. John, any final thoughts on Conagra as an investment?
Conagra's proactive approach to managing costs and focusing on high-potential areas is promising. While they face near-term challenges, their long-term strategy could yield positive results. Investors should keep an eye on their ability to navigate inflationary pressures and execute their growth plans.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Conagra's performance in the comments below. Until next time.